Okay, hey everybody, thank you so much for coming out today to our weekly market recap. This is Greg Lewis coming at you from my basement, which is the temporary MetaStock studio. Today's MetaStock guest is Tim Straiton. He's an asset manager and a MetaStock distributor in Sweden. And considering the continuing unique times, both socially and market-wise, it's always interesting to see right now what our experts have to say about the market and how the market has been and what we can maybe do to take advantage of it in the weeks coming. So I know you look forward to that. A few items of business. One, we'll be starting in about 3 minutes, as you can see from our little counter here. And two, we are recording, and today's presentation is only going to be on YouTube. A lot of times we simulcast on YouTube and go to webinar, but today it's only going to be on YouTube. And I'd like to remind you that I am available here on chat. If you see MetaStock on chat, that's me. By the way, I see some people coming in. As you come in, go ahead and tell us who you are and where you're tuning in from today. At any rate, another few things. I'd like to remind you that we are being presented by MetaStock today. And if you don't have MetaStock and you would like to get MetaStock, a really good place to do that right now is here, metastock.com/ADMM420. metastock.com/ADMM420. That you can see, if you look right here, you can get some great deals on MetaStock as well as other things like add-ons and data and things like that. Okay. So we got about 2 minutes left. I'm going to go ahead and go offline for just a moment and check in on our presenters to make sure they're ready to go. Before I do that, one more thing I wanted to tell you about. On May 30th, which is a week from this Saturday, we're going to have a Trader Summit, which is an 8-hour-long marathon session with 8 presenters for 8 hours. It's a great session. We do it about once a month. To register for that, go to metastock.com. I'm going to show it to you real quick. You can go to metastock.com/traders-summit, and here you can see all the presenters. There are many. Well, there are 8 anyway. And they do a great job, and we also get really, really good feedback about this, and it's some really great value-add information for traders. All right, we got about 1 minute, 2 minutes to go. I'm going to go ahead and check in with our I'm going to go ahead and mute myself and check in with our presenter and see if they're ready to roll.
Hello, everyone. My name is Hunter Smith with MetaStock, and welcome to our Weekly market roundup. As you can see, we're still enjoying the comforts of our own home, working from home. It's been very good. I don't have bruises on my face, so my wife hasn't hit me too hard yet. So today is May 22nd. As usual, I am going to read the disclaimer real quick. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of our software, any trading strategies, or any information provided in connection with the company. That is hopefully the most boring part of this presentation. Today, I would like to welcome Mr. Tim Straiton. That is not Gary Burton. I have not updated my slide. That's my one mess up for the day, and I hope that you will forgive me for that. Tim, how are you doing today?
I'm fine, thanks very much. Yeah, I've got a lot to talk about today. I'd like to try to cover as much as possible, going from the S&P, precious metal ratios, sectors, which I think is an important part of today's stock market investments, because due to the coronavirus, a lot of sectors are going to be hit hard long term, but there's also opportunities in various places. I think, above all, the IT sector will profit from this. I think companies in real estate office space are going to get hit hard because, according to a research by one of the top real estate companies in England, they asked 300 companies worldwide if they're going to support home office activity for their staff. And 89% of these companies said, we will certainly do that even when the coronavirus pandemic is away. So it doesn't look very good for real estate, especially office blocks.
No, I agree. I really think this whole thing is it's going to usher in a new era, because what you have is, like you said, I mean, it's a perfect thing to bring up, is offices have had their employees working from home for the last couple of months, etc. Well, the idea behind most businesses, hopefully, is to profit, and one of the best ways to do that is to minimize your outgoing expenses, your overhead. And your literal what's over your head is typically one of your largest expenses. So if a company can continue to operate at 100% efficiency, and they don't have to have the retail space or the office space, I mean, what's that going to mean? What's that going to mean for the offices out there, the office real estate, the commercial real estate market?
Exactly that. Speaking about the market, I see you've got the S&P chart up here, if I'm correct. Huh?
Yeah, I have a few charts up. Dow's up right now, as well as S&P is up 6 points today. Nothing crazy. It was it's really been, for the most part, kind of a sideways few days. We had a doji on the Dow today. I tell you what I'll do here, just to make it easy, is I'll switch control over to you.
Okay.
You can show the charts that you have. Let's see.
Okay, I'll go full screen now with my stuff. Hold on.
Perfect.
Okay.
Now, as we do, just a side note, as we do this analysis, as we talk through the different markets, make sure that if you have questions out there, you let us know. Feel free to type them in the YouTube live chat. We're always happy to answer questions or look at specific symbols, etc.
Okay, so I'm just going to go ahead and look at the S&P 500. What you see here is looking at the relative strength index. It's hanging around 60%. It's been more or less the same level for about quite a couple of weeks now. Can't read much out of that. We're just below the 200-day moving average. We've made the 61.8% February retracement, and it's sort of hanging in there. So the way I see it, it looks sideways to me, but there is a possibility that we go a little bit further. I suggest we could go to 3,140, but for me that would be probably the end of the line for this recovery, because if you look at the fundamentals, they don't look so good. There's so much uncertainty out there with the coronavirus. A lot of sectors are going bust. So it doesn't look quite good, but we've had a lovely retracement. And I think probably looking over the next month or so, it will be a time to really look at one's investments, sort them out, because I rather have a feeling we're going to see more downside in the rest of this year. I put up here a Fibonacci target, and it looks as like this upward phase could end by about the June the 8th. So we have a little bit of time to sort out what sort of companies we want to stay invested in at all.
And
So,
Tim, real quick note for you.
Yeah.
Would you mind expanding the screen to fit the whole one? Just hit the. There
sure.
we go.
Sure.
Perfect. Just want to make sure everybody could see the charts.
Okay. Can you see all of it? Because on the right, I've
Yes.
got a go-to webinar thing blended in. Sort of.
Yep. We can see everything. Everything's
You
fine.
can see. Oh, that's great.
Mhm.
So I think that explains everything about the S&P. For me, its trading is now not necessarily trading the index, but looking at particular sectors, because it's not clear to me out the index which companies are going to profit and how they are going to influence the index going forward. So it's sideways. It looks as though most market participants have lost the initiative and don't know where to go. And so you could see that in the price action right now.
Yeah, and I feel like that, that possibly that 3130 mark, the high of that bounce after the initial crash that we had, lands around 60 or 76.4 on the Fibs, right? I feel like that's going to be a really important line if we make it there.
Mhm.
What's interesting is I feel like what has happened is you had the strong move up from the market regrouping, but a lot of that, again, the push down was based off of emotion and fear. The push up was everyone trying to get into the market and buy everything at a discount. I feel like this flattening out period is really kind of everyone coming to grips with the actual economics behind everything, the actual fundamentals coming in, the actual real estate numbers coming in, the actual job unemployment coming in, etc. I think this flat out period could last for a little while. What do you think?
I think so too. I think it'll be a sideways market. In fact, I trade a lot the Russell 2000 and ETFs, and I'm happy with the small profits. I'm not looking for any big move, especially now, and it's in and out with relatively no leverage. I'm not trading leverage at all. Because I don't see much. I have no real conviction. I try and take profit on small market moves. I think I'll stay that way for the moment.
Yeah. I mean, it's we have a couple of instruments, gold, silver. those things are moving with a little bit more conviction, because I feel like right now people are, in general, they're getting into the market, but they want that safe space, that safe corner in the market, where they can protect their their investments. And I think that a lot of people feel like that could be gold and silver right now. What do you think?
Well, yeah, I'm just going to change the chart now. Hold on. What I'd like to show you first is a chart I've drawn up, a ratio of gold against the S&P 500. There you go. This is interesting. This is a chart going back from the year 2000. You see, in 2010, the ratio was to the S&P was 1.49, and we are now down to about 58. And if you look here, the moving average, this is a weekly, this is a monthly chart, but you can gradually see now it's making a base, and moving averages, the long-term moving average, these are gradually edging up. So this could be, could mean for me appreciation of gold against the S&P 500. And it looks like there's a long way to go up for gold when you look at this ratio.
Yeah, and someone in the comments, Christian, in the comments, said, "Don't you think it's a little bit scary that the stock market has been going so well the last month compared to the Corona lockdown around the world?" Christian, it's an interesting point. I'm not 100% convinced that it has been going so well. We've only really gotten traction on about 50% of what we lost, which is good. But I think that Tim and I are looking at this right now and saying that there could be a lot of stagnation. Tim, you were talking about not in leverage. There's no volatility out there. Everything's a little bit down, or sideways. Let's do
muted. Right.
Sorry,
okay,
we had little interference from the marketing guy coming in.
Okay.
But yeah, I mean, it's a good comment. Tim, why don't you? This ratio is pretty interesting. Do you feel like gold is a better bet right now?
Well, I must say, my personal, I used to be a gold trader in Zurich back in the 70s, late 70s, the time when the Silver brothers were at it, and the silver made dramatic moves. And I was a market maker with American Express Bank, 78 to 81, and we had no technical analysis. We just had a point and figure.
Unmuted.
And you had to use your nose. That's all I had to guide me through through these times. But it was interesting. We've got now a lot more information research at our fingertips. So if one knows how to use technical analysis, one can keep oneself out of trouble. It's easier than it was many years ago. What I like to bring up now is the gold price. Let's have a look here. Gold US weekly. Just explain this out. Okay, so you can see here we're getting very close to the previous high we had in gold. That was back in this was back in 2010. We were 1920. think the price is up there. So we're getting very close to the highs we saw back in 10 years ago. And moving averages look good. They look very positive, going up. And I'm not saying we're going to go straight up to the old highs. We're going to probably have some retracements, a healthy retracement. Wouldn't be surprised. If you look at the relative strength index on gold, you could see gradually each edging down. So it could be that we're going to say short term, possibly a short retracement. We've had one before here where we went down to 1460, I believe, 1450. Can happen again. But the long-term trend looks pretty good. The other important, interesting cross also is the gold-silver ratio. I'd like to show you that because this is incredible. Now this is absolutely mad. We've been up to 120 to 1 recently. It's retracing a bit. So we had a price ratio, gold and silver was in 2011 down to 32.30. We've been up to 120. We're now just over 101. And in my opinion, for someone who's looking for investment in metals, apart from gold, one should look at silver because it's incredibly cheap. For me, this is an exhaustion situation. This sudden jump from 100 to 120, and now we're on the way down again. I believe if people investing in precious metals, apart from gold, they should take a handful of silver.
Yeah, and gold has been, and from previous market roundups, we've looked at the primary market crashes, and gold, on average is most of the time it's at the leading curve of that kind of bounce for the entire market. And what's said for that is gold starts going up first, but silver is an amazing investment because it's so much cheaper, and it takes a little bit longer to start that bounce. But I mean, the value in gold and silver right now, I think it's astronomical. Do you have a silver chart we could look at?
I do, yeah. Hold on. Okay, this is a weekly chart on silver. Just want to go over here. All right. It's been very volatile. I would say silver short term could return perhaps to 15.5. It's possible. We've had a massive move up. If you look from 1150 up to where we've been now to 17.5, this is a massive move. So it wouldn't surprise me to see perhaps a retracement down to 15.5. Why not? But when I generally looks at precious metals, looking at the gold trend, I think if we do retrace down to that level, 15.5, that's a blind buy.
Yeah, that's again, we're looking for, primarily we want to find these instruments that are not surging as much, but maybe they've surged and they've come down a little bit, and then they have some upside to them. I think that silver is going to be a very good investment. That's incredibly volatile, especially for a weekly chart. I think 15.5 is definitely realistic, but I think that that's a key trigger point, because your next resistance level is right around 18.5.
Right.
I would say that in this scenario, if silver does break 18.5 on this move, that it might be a bullish scenario as well, because it is breaking that resistance. But most likely, I kind of agree with you. It's been moving sideways. It's regained a little bit of strength, but I do see it falling back short term. But that just means it's a great opportunity later on.
I would say so, but silver is one of these things. It sleeps for a long, long time, and suddenly it catches everyone by surprise and moves incredibly. I've seen that in the past. If you look back a little bit further, 2010, where we've been, look at these moves. It's incredible. Actually, since 2015 or 2015, there hasn't been much of a move. We've been in relatively for silver, a narrow trading range. But this could change pretty soon. I think with all which is going on now with the world economy, there'll be a run for good investments. I mean, if you look at Treasury bond yields, in my opinion, it's not the place to put your money right now. You've got a big risk with low return. So I don't think there are many more options out there to invest capital than precious metals. And the currencies, yeah.
Oh, so go ahead.
Oh, and for the currencies, I used to be trading foreign exchange years ago, but with the percentual movements in currencies nowadays, with central bank intervention, especially in Switzerland, it's very, very difficult to trade. And the percentual moves, the rewards are very small. So I think currency trading is, for me, is the wrong place to be. But that's my personal opinion. I hope those foreign exchange traders out there don't like it. They may not like that, but it's the way I see it.
Well, they can't throw tomatoes at you through a computer screen, so
that's good.
That's fine. What an interesting point that was brought up is the effect of the crypto market on the stock and the gold market. Now, Tim, have you traded cryptos at all?
No, I don't touch it. I look at it with. It's interesting, the moves around, but I don't trade that. I think it's too early. I think the blockchain technology has probably a great future in various sectors, also in medicine, but for me it's too early. I think it could have a future. The way every transaction is documented by thousands of computers, that's fine. That sounds good. But there's been a lot of fraud in these markets, so I think it's a little bit too early.
The crypto market is very interesting. I have to agree with you that I feel like it is a little bit too early. It was very, very ahead of its time. The technology is amazing, and I think that investments in the companies that have blockchain technology, I think that long term that will be those will be very good investments. However, pardon me, it's like the wild, wild west. I mean, there's no, again, there's no oversight to it, and again, that's by design. That's kind of what makes sense about the technology. But I do feel like it's a little bit too early, and honestly, I don't think it's having that much of an effect on the market. I'm looking at my other screen. I'm looking at Bitcoin, which is obviously it's the primary one. There's 1,000, 1,500, or whatever other ones, but Bitcoin's a primary. It's down a little bit today. It's had a lot of sideways moves, and I think that what's happening is that big jump where we hit, you know, $20,000 on Bitcoin. Again, this was something that was primarily emotionally driven, and then we've lost, you know, well over half of that, and it's seen much lower days. I don't think that that is a place where people are looking to put their money right now because it is so volatile, you know. I don't see it impacting the market as well. Now, an interesting point that was raised was the electronic currencies, good places to put your money. For example, Visa, you know, MasterCard, the credit card companies, etc. And I think that as time goes on and people don't want to touch actual physical money anymore, which makes sense, more and more of the market will be driven to digital currencies. I just don't think yet.
I would agree with that entirely. Hunter, I've got something else to look at about sectors in the market. I've put a chart up now. This is a ratio of the Russell 2000 against the S&P. And as you see, actually there was no big moves until quite recently. And in the last couple of months, the Russell relationship has dropped. These are small cap companies which have really taken a real hit in general. So this leads me on to the subject of which sectors one should be invested in, which ones we should avoid. I think this chart makes it quite clear that small caps are under pressure. And I'd like to demonstrate this with a few charts I've put up here on a few sectors, which I think one should avoid. The first one, let me just take it. Okay. At the moment, one of the sectors I would avoid is the banking sector. And I'd just like you to look at the chart of one of the leading US banks, is JP Morgan. And if you see that where the S&P has recovered to 61.8%, look at this as a typical bank stock. It's just almost a dead cat bounce, you can say. So also Swiss banks, if you look at Credit Suisse, it's a disaster. Deutsche Bank, a disaster. So although they're cheap, I don't think in this current interest rate scenario, the banks are going to do so well.
Yeah, that's an interesting one. You know, as we move lower and lower on the interest rates, well, interest rates are how banks make money.
Exactly.
So, you know, if we don't see magically everyone starting to make more money sooner than later, the banks don't have that, you know, the interest rates basically are going to stay low long term because people can't afford high interest rates right now.
That's right.
And that's how the bank makes money. So is interest rates.
Yeah, that's a typical bank stock. And well, I'd like to show you something else which looks a little bit more encouraging. And this is in the 5G telecommunications center. We have a look at Sienna Core. Just to show the difference. Now, this is in this time where everything has been crashing. Look at this chart. It's just defying gravity. And this is typical for a lot of these 5G telecommunication stocks. So for me, even if that's a little bit overdone short term, I think there is future in those.
Yeah, that's, you know, that, pardon me, those are the types of stocks right now that you're looking at and saying, well, the thing barely moved when the entire rest of the market around it was collapsing.
Mm-hmm.
You know, and those types of stocks are something that are going to be strong long term, I think.
It looks that way. looks that way. Also, precious metal stocks, Barrick Gold, Newmont Mining, they've been fantastic performers in the S&P 500. It looks as though they continue to do well.
So have you looked at the rest of the telecommunication market? Would you say that the entire sector is pretty average to that?
Yes, in fact, on my website, Stop Loss CH, I do a rundown, a weekly performance analysis of various sectors. The telecommunication sector is one of those which is overall, all the top leaders in this sector are doing extremely well, almost without exception. And most of them are trading above their 200-day moving average, which is a good sign.
Now, in your analysis, how important is the 200-period moving average?
Well, it's just, for me, it gives me an idea. Is this stock performing well or not? I don't hold much of golden crosses and such things because generally the time is completely wrong. In fact, when the 50-day moving averages crosses the 200-day up or down, that may be a sign of the general trend, but it's useless for timing, for market timing. It just shows the probable trend, but I wouldn't open a position when one of those moving averages crosses the other. You know what I mean?
Yes. I agree with that. I definitely use the 200-period moving average quite a bit. You don't want to trade against the trend, and I think that is, that's a basic, it's a good basic tell of where the stock is moving, whether it's above or below its 200-period moving average.
Yeah. I've got something here, see, just a long-term chart of the 30-year T-bond, Treasury bond. So when I was trading in the 70s, in 1982, I remember we were placing money in dollar Treasury as our treasuries, 15.2% interest we were getting. Wow. Now we're down to 1.3 or something like that. So if you look now at this chart of the 30-year Treasury bond, the distance from its moving average, the 40-week moving average, has been drastic. It's been over 50% below. So I could imagine that based on that, if you look in the past, when the price goes far away from its moving average, it generally bounces back to a certain extent. So I would imagine that from here, we could see slightly higher interest rates long term. Although, and also Powell said recently, he's not thinking of going into negative interest rates because it'll probably be of little use to anyone, the economy. So I could imagine that in a 30-year T-bond that we possibly go back to about 1.8 or even 2%. It's possible without the trend changing for the lower interest rates. But I think
that distance from the moving average is also another very, very good point. A lot of people base their overbought and their oversold conditions based off of how far away it is from the moving average.
Yeah, so I would just conclude there that we might see weaker bond prices short term. I would imagine. I may not be right, but it looks that way to me.
It's okay. We already put
But,
the disclaimer at the front end of
the disclaimer is that, well, that's good.
so we can be wrong, you know.
Oh,
Not
I've
trading
been wrong many
advice.
times. This won't be the last time. What else have I got? Let's have a look. Yes, another one. Talking about precious metal ratios, I've got also the gold platinum ratio. Now this is quite hairy, because we go back to 2008 when we had the last crash. The platinum price was over double the price of gold, and now gold is over twice the price of platinum.
Wow.
And platinum is a precious metal used in jewelry, also in exhaust for car exhaust. Why the price of palladium jumped against the price of platinum, I really can't say. But there are two producers, as Russia and South Africa. They seem to have the market in their hands. So they control, more or less, they control the price. But I would say also, talking about metal ratios, if one says silver is a low risk opportunity, then you should also look at platinum, because that probably has if the market corrects a little bit, it could be a good investment.
Yeah. You know, I think that you know, primary sectors to focus on. Telecommunications is not one that I had really thought about initially. Precious metals, definitely. You know, I think pharmaceuticals is going to remain pretty healthy, pretty strong. You know, because of so many health issues out there, people that make these, you know, these pharmaceutical, you know, the pharmaceutical equipment companies, et cetera. I don't really think that's going anywhere anytime soon. You know, but up. You know, I think a good rule of thumb here is not to be rolling the dice trying to find something that's 50% off or 60%, you know, off, discounted,
Okay.
and trying to make the huge play. I think the idea here, honestly, and you know, please tell me if you disagree, but you know, I feel like the good play is to be looking for these stocks like the telecommunication, like what was it, Sienna Corp, these things that have stayed strong, have taken possibly a little bit of a hit through the crash that we had, but have now recovered the majority of that.
I would agree with that. I would agree with you entirely. In fact, I put focus on those pharmaceutical and telecommunications, but I just wanted to show you out there what has happened in the metals market. Perhaps people didn't even realize it, but being me as an ex-metal trader, this sticks out in my face. You know?
Of course.
I just thought it would be worth. I'm not advising anyone to get involved, but I just make people aware of the fact what is going on. We've had such incredible, out of this world moves in metals.
Yeah, and metals are it's such a, you know, I would put it in that category with the safer bets, because you have a lot of individuals that again are getting into the market because they understand that there's a lot of opportunity right now. We've seen it extensively in our industry, and they're looking for, you know, the longer term investments, and I think metals are going to skyrocket. I really think that they're going to be the leading edge of the financial bounce, financial recovery. And the slower that recovery is on the Dow and the S&P, I think the metals are going to skyrocket even further and faster.
I would agree with that. It seems logical to me. Often the markets are not logical, but I would tend to go that way. In fact, personally, about 5 years ago, I bought myself a lot of Krugerrands, the 1-ounce coins against Swiss francs. and that turned out to be a really good investment. I think I paid 1,150 francs per piece, and they're now about 1,680.
Ah,
so
well, lunch is on you the next time I come out.
That's right. That's right.
Well, do you have any quick takes, any stocks that aside from Sienna Corp, any stocks that you've been really keeping an eye on that you think might be
Yes,
good?
I do. I do. In fact, I'd just like to show you one. Yeah, you'll be surprised, but this is one I've been following, been trading quite a lot. Is in the oil service sector. So again, if we put it here. That's not the one, sorry.
Also, as a side note, while Tim's pulling that up, again, if you have stocks that you want us to look at, feel free to throw them in the comments on YouTube. Let us know. We're happy to do some analysis for you on different stocks. More Tim than me, because I'm not the professional investor here. I'm just the guy sitting at home.
This is a stock I'd like to, which I trade quite a lot. It's Energy Transfer. You can see where we've come in this oil crash. We've been down to about $4. Before that, we were around $13, $14. But the company is making money. They're in the oil service sector. And there's been a lot of inside buying of the management have been buying shares. It's almost coming out of fashion, so I like it very much. I think it's got a chance. They're making money. They're one of the important oil distributors in the States. So this is one I would try and trade. I'm not saying you have to go in right now, but there's always opportunities in the sector. And the level, I've been trading it around between $5 and $7.5. But I think it's got a good chance to recover. Especially, I've heard research on oil price. Now, you won't believe this. After we've been in minus in gold in the futures last month, we were down to minus 40 in oil futures because the holders of long futures positions couldn't roll them over, and they had to find someone who would take them off. And storage capacity is almost non-existent. This was the reason for this. But I think the oil market will normalize, and this will give a certain support to some of the oil companies. So I don't see there's a great risk in the oil service sector right now, and this is one company I would look at.
Now, I do have a question about this chart. This chart, you have kind of a support / resistance right where it's at right now at 8.5. You have where it really dropped off a cliff right around
you have 10, a gap.
1025. How do you play that gap? Do you use that as something where if it breaks right when it breaks that that support line, that 820 where it's at right now, if it breaks that, do you look for it to close the gap? When you see a gap like that, what is kind of your general rule of thumb as to how to trade that?
Well, gap trading. This is a thing. I tend to use options, in the money options for things like that, because if I'm wrong, it's going to cost me a lot of money. But I think this is an interesting area where one could adopt an option strategy.
So are you looking at a straddle in this situation?
Well, basically, no, not at all. I would say, if you look at this level here, let me just change the color. So we can get a line here. Okay. Okay, here we are. So here we are. What one could do, for instance, one could take an in the money, deep in the money option. That's a 7.5 strike on ET, perhaps for 3 months. If it breaks, that's good, but there's no guarantee. I mean, it looks as though we've been up here once before. This level, it failed here. We've come down again. It could also fail here again. But I think it's worth a bet, because if that breaks, we're easily up to $10, $11, $12.
Mm-hmm. Agreed. Okay. We do have a couple of requests.
Right.
BA, which is Barnes Group, looks like. Just BA. Yep, there we go. Oh, Boeing.
Barnes Group. Okay. Shall I get rid of my chart? Do you want to put yours up?
Sure.
Okay.
Let's take a look here. Give me just a second. Okay. All right. So we have. Let's see here. Let's open up a. Boeing. I don't know why I had the other up. Okay, let's take a look here. So looking at, I do have a candlestick. I trade candlesticks, so I have one of our Steve Bigelow's system on it.
Okay.
These are all moving averages, just to kind of give you a breakdown. His signals are right here. I have my thought in mind, but what do you think, Tim?
Well, after this horrible move down, which we see here, actually the recovery hasn't been very encouraging, in my opinion. When you look what the S&P has done, we've been have a retracement of 61.8. This stock hasn't really done anything. It's not far away from the lows. So I don't know. It doesn't look so encouraging to me right now. But I mean, perhaps for short-term moves. But if you look at the moves since then, there's no been buying stampede on this stock at all.
Yeah,
it's been a long time. It doesn't look happy to me.
Yeah, and Boeing is so we do have a manufacturing plant here for Boeing, and I do know a couple people that work for Boeing, and honestly, and this was reflecting, they had a couple of crashes, airline crashes that did not bode well for them, obviously, whatsoever. There's no, there's no strength here. There's no momentum pushing it forward. Stochastics are high right now, and it's not doing anything.
Not doing anything.
It's for me, for Boeing, I would need to see a seriously strong. I mean, even if we got to the 210 mark, even if we got back to 210, I still wouldn't necessarily be convinced.
Yeah, I would agree with that. It just doesn't look, perhaps something comes out and the market does skyrocket. But as if I look at this chart now, there's a lot of other places where one can place my money where you probably got quicker return, quicker reward. This looks as though it's going nowhere. Huh?
Yeah, it doesn't look great. So Boeing, I think both of us, Richard, both of us are a little bit bearish on Boeing. I think we both agree that there are much stronger places to put your money right now.
I would agree with that.
Let's take a look at. Let me actually change. We're looking for. We'll stick with that. So let's take a look here. They're requesting an oil ET. Let's see, an oil stock. Let's just do the oil ETF USO. I don't know why my computer's being slow right now. Okay. Oil. We know that it's an interesting point that you brought up, Tim, with the oil oil services. We for the longest time I've heard that we just don't have enough space to store oil right now. I mean, with this massive price drop, you know, we have this drop off of a cliff. I'm pointing at it like you can see my screen. We have this massive dive off of a cliff. We have a little bit of a bounce, then we have a lower low, then we have a little bit of a bounce. We have a lower low. We have a larger bounce, but again, a lower low here, and we're just kind of moving sideways. Tim, how do you feel about the oil ETF right now?
Well, actually, I was looking at it when we were in the light crude oil contract was trading minus. I thought, well, this looks interesting, but I didn't actually do anything in that. I think it looks a little bit. This market to me looks a little bit more exciting than the Boeing that you showed before. So I would say this is more, looks as though it's more tradable, and I would say we're going to probably see a base in oil in the short term, and I wouldn't be surprised to see later on this year much higher prices, because if you look at the trouble with Russia and Saudi Arabia, they've realized that they're just shooting each other in the foot if they increase production.
Mm-hmm.
So obviously the thing to do is to lower production, because the storage capacities are not available at the moment, so it doesn't make sense. But consumption will probably pick up again when airlines get back into business and so forth. So in actual fact, for you and me with a car, whether I pay $2 a gallon or $10 a gallon, I can only fill my tank with so much. I can't profit from the oil price. I can't. Well, I've only got one car, and I can only put 58 liters of petrol in it. You know, so it's not going to make any difference to us where the price is. So it's up to the Saudis and the oil-producing countries just to realize that there's no point in making competition. They can raise the price, and it's not going to hurt anybody. But I think the oil price has an upward potential this year, and so I would try and buy the dips in oil. If I look at it right now, it looks a bit on the topish, but one just has to be, when one has a sell-off again, and just has to have a go. And I think the downside risk is limited.
Yeah, I mean the downside. Here's the thing with the oil industry is we're looking at a classic example of supply and demand. Right now we have a ton of supply and very, very little demand. We have very, very little people, very, very, very few people on the roads. Comparatively speaking, of course, there's still traffic here where I'm at, but most people are staying inside their homes. Larger countries, have these lockdown orders, et cetera, and we have so much supply with, airliners having a bunch of trouble right now, just not flying as much, obviously. They're not buying oil. I have a hard time believing that oil will stay down for long. I think it could be a good investment, definitely long term, just because of its history and our dependence on it. I definitely don't think we're there yet on that turnaround point, but I'm not a guy that really would want to buy, let's say, on this bar, because I think we're going to start gapping up after this. I want to see some consistent history, maybe breaking this and retracing a little bit. We're breaking this line where it had a little bit of strength in its move up, but it failed. If we get above 46, 47, and maybe we get a little above that and see a little bit of a dip down, but we bounce off of this, then maybe I'm buying oil. But I'm in the boat with you. I really think it's a good investment. It's just kind of a question of when, right?
Well, yes, I just have to look for opportunities. I mean, the market gives always opportunities, and one just has to take them at the right moment. I mean, if it gets oversold, or we see, let's say, the MACD is turning from negative to positive, one can have a go. But I really believe that there's not much to risk on the downside.
It's true. The red line here is the 200 period moving average, like we were talking about a little bit earlier. And then we have shorter term moving averages down, but I mean, we are far away from that 200 period moving average. So
that's right.
I think the likelihood of these coming together pretty soon and this kind of moving up, I think it's good, but it's just, again, you can't make a consistent living when you're trading and trying to identify the breakout the day that it happens.
No. And that brings me back to these oil service. There's a lot of oil companies which have been smashed over the last couple of months, and there's a lot of opportunities in the oil sector. Not only the one I mentioned, but there's a whole list of them which have been absolutely smashed. Royal Dutch Shell, for instance. ConocoPhillips, Chevron, Total. There's so many of them out there, and it's worth looking in this area.
Yeah, definitely. Tim, with that, I think we'll kind of wrap up here. Is there anything else you wanted to cover today?
I think that's more or less what I have to offer for today. So
wonderful.
Thanks very much for having me, Hunter. That was a great pleasure.
Now you out. Yeah, I was just going to say, but before you leave us, tell the people out in the audience how to get a hold of you if they have more questions. Yeah, well, I have two websites which run it. One is stoploss.ch. That's stoploss.ch. You can just use the contact form, and I'll get back to you. The other one is metastockswiss.ch. That is widely used. It's got a lot of indicators, custom systems, and so forth on it. You can get me on either of those websites. Yeah, and both those sites are very, very good. He has quite a few unique tools, some of which are coming soon to MetaStock. Well, can't say much more though.
Okay.
But out there in the audience, thanks so much for tuning in. Tim, it was a true pleasure having you on. I hope you'll do more of these in the future.
I'd love to. So thanks very much for having me. And, wish you a great weekend.
Yes, of course. You have a wonderful weekend and a wonderful evening. Out there in the audience, thanks so much for attending this webinar. I hope you got some good ideas. We did some pretty solid analysis, I think. I hope you have a wonderful weekend. Remember to stay safe out there, and as always, happy trading.
All the best.
Hey everybody, just one last reminder. First of all, I wanted to say thanks so much to Tim Straiton for helping us out today and for giving his views of the markets last week and going forward. And thanks, of course, to Hunter Smith for hosting. Quick reminder, again, next Saturday, May 30th, we have an 8-hour Trader Summit. It's free. We'd love you all to join. You can do one of two things. You can go to metastock.com/traders-summit and register there, or you can just go to our YouTube channel. You'll see it. It's listed up there, and you just click on the bell, and it'll give you a reminder, and you can join us that way. Also, again, this was sponsored by MetaStock. If you'd like to know more about MetaStock, right now we have a great sale going on. If you go to metastock.com/ADMM420, that's metastock.com/ADMM420. Thanks again so much. We hope you all have a great day and successful trading.